let me first introduce myself. My name is Jonatan Randin. I'm a professional trader. I've been trading for 7 years, and I want to talk about, I want to put my, experience from my journey because I started where I know many of you are today. I've gone from basically nothing to doing this professionally. Just so I think I have a pretty good understanding of what I wish I knew when I started. So if somebody asked me, what could I have done differently in the beginning that would have set me up for this career quicker? And there is three main things that I want you guys to focus on if you want to achieve that long-term consistency as fast as possible. And when I say as fast as possible, I obviously mean in a reasonable amount of time. Okay, you're not going to become profitable in 1 week, but it doesn't have to take years, right? So first, I want to cover the three foundation, the foundation for trading success here, and I believe three of the absolute most important things here is, first of all, simplicity. And then number two, we have testing and validation. And three, very important, of course, we have risk management and consistency. And you might ask, why do I have two things in the third list, risk management and consistency? But those, in my opinion, risk management and consistency align quite well together because risk management has a lot to do with consistency, and your consistency in trading has a lot to do with risk management. So just like point number one here, I'm going to keep it quite simple in this webinar because that's what trading is. Trading is supposed to be simple. We tend to make it very, very complicated without really needing to. So first off, simplicity. When I talk about simplicity, and I have this saying, if you've been following me on Twitter and YouTube, I always say simplicity is the key to long-term success in trading. And what I really mean about that is you need to focus on the basics of technical analysis. There is no need to reinvent the wheel. We already have people that's profitable. We already have people out there with profitable system. Do you really need to create a completely unique original system? Not really. All you have to do is just watch the people that know what they're doing and focus on the very basics of technical analysis. And when I say the basics of technical analysis, if you're completely new in the market, I would say focus, first of all, on being a trend following trader. Now, there's nothing wrong with trading within a range or being a range trader, but the most simplest way to make profits in the market is to trade with the trends. So the basics of technical analysis, for example, would be to focus on the characteristics of a trending market. And so that would be market structure. And in my opinion, supply and demand, horizontal support and resistance. So you take those two things, market structure, where you focus on trending markets, and horizontal levels. Those two very simple concepts will create probably 90% of all the trading systems out there. Any system you find will be a variation of this with added indicators or new concepts where they've taken something and just put a name on it and tried to make it unique. But it's not really. It's the very foundation of technical analysis is very, very simple. And like it says right here, I like to always say that TA is simple and trading is hard. So there's no need to complicate the TA part because you're going to have so much trouble trading anyway. So keep it simple when it comes to technical analysis, and the actual trading part, the part where you execute the trades, that's where you want to focus on. So simplicity, very, very important in everything you do. Don't try to complicate it. Focus on what already works, what you know works, established true things in the market. And we're going to look at some examples of this. Very, very simple things you can use to try and develop your own system. And the idea here is to try to give you a roadmap, to give you some very, very simple ideas, and then to give you an idea of how you can test this. And then when you have something that you can actually confirm for yourself that it actually works, that's when you want to apply the risk management and the consistency. And then the second point, that would be the testing phase. So you want to keep it very, very simple. So let's say you're going on YouTube and you're searching for, I don't know, let's say you search for a master class in market structure. That would be the very basics. Now, what would you learn in that course? You would most likely learn that markets, they tend to trend. We don't really know why. Well, there's a lot of theories out there for why markets trend, but as technical analysts, we don't really need to know. All we need to know is markets tend to trend, and it's our jobs as technical analysts to identify the trend and then ask ourselves, how can we participate in the trend for as long as possible? So let's say you find a trend, okay? So you have a simple uptrend. Now that would be a bullish market structure right here. So one way to trade this, or actually two ways to trade this, would be to trade this trending market by adding what I talked about yesterday, horizontal levels. That's all we care about, the supply and demand. That's all you want to care about in the beginning, because remember, every system out there, now of course there's going to be people in the chat saying, oh, not every system. Well, yeah, obviously, but most, 95% of the system out there is just variation of this. So you have two opportunities to get in on this trend. Remember, we want to ask yourself, how can we participate in the trend and ride the trend for as long as possible, capitalize on the trend while managing our risk accordingly? You have two options. There's 2 points of entry here, in my opinion. First, on the breakout, and then secondly, on the retest of that breakout level. So if you want to focus on creating a breakout system, you want to look at creating a system with entry triggers on the breakout, okay? And if you're a break and retest system like myself, you want to wait for the breakout. And then when there's a breakout, you patiently wait, sometimes a very long time, for that level to get hit. And when that level gets hit, you develop a simple idea for an entry trigger. And I can give you some ideas on that. And of course, if you want like more live examples of this, this is the way I'm trading in the live trading rooms as well. So every Monday, Tuesday, and Wednesday, this time on YouTube, you'll see live examples of this as well. So you can take this experience here and then look at actual live examples. So these are the two ways of entering. Now, you want to make sure that you test this. So you first have an idea. So to test something, you need to have something to actually test, and that's the idea. So let's create an idea. We're going to be using the break and retest idea here. So let's just assume that we have this retest right here. So the first criteria for entering a trade would be to first have a breakout, which we had right here, and then have the retest. So let's just say if you have, if we get, it's a great question from Patrick, by the way, I'm going to cover that. So if we, for example, have a bounce here, we're just going to have a very simple rule. whenever there's a bullish candle, the very first bullish candle on this level will be part of our like the number one entry trigger. Okay. So when we have that trigger, we need to focus on where should we put the stop loss. Technically, an invalidation level for a trend is always going to be the previous higher low. Now, and for me, I would say that the TP for this idea would be to target the next high, like a move that would be as big as this one. So let's say this would be like a, I don't know, 1.5 R trade or something like that. Quite small, but it depends on your win rate. But doesn't matter. I'm not giving you like I'm not here to give you like a details of a profitable system. I'm just giving you an idea here, an example to test. So entry criteria number one, the first bullish candle when hitting the level, check. We put stop loss here and we put TP here. That's great. That's a great idea. Now, what do we need to do to actually test this? Because remember, if we don't test this strategy, we're basically just gambling. We have a beautiful idea. It sounds very good in theory. We've been reading a lot of books. We've been listening to a lot of podcasts, and we've been watching Zoom sessions like this one. And we're just gonna throw ourselves out in the market and we're gonna test this. That's what most people do. But what you need to do is you need to first of all you need to back test, and then you need to forward test, which is basically yes, this recording will be available later. So yeah, where were I? Sorry, I have this massive headache, so you gotta apologize if I'm a bit slow today, which might actually be a good thing because usually I talk quite fast. So untested strategies is basically gambling. So you have to test everything, and this is a big process. Okay, when you're creating a system and when your goal is consistent profitability, you're taking on a huge task. Okay, and that's also one of the reasons I'm saying keep it simple, because this is very, very complicated. So the more complicated you do this, it's just going to take way too longer, right? So there is a structure you have to follow. There's no question about this. Everyone follows this structure, and you have to follow this structure. The more complicated you make things, the longer it's going to take. Just take it easy, keep it simple. And I'm going to show you an example of a backtesting session that I have done for a system that I've been testing. I tested this last year, and I spent a lot of time testing this. So you can see here. Let me just share this with you. So here is a screen. Hopefully you can all see this. And this is a backtesting template. It's just a quite simple backtesting template. You don't really need to have something, advanced like this. You can really have pen and paper, but if you have a simple Excel sheet, a spreadsheet where you can just track the win rate and the P&L and all that, that's great. But this is, I'm testing all these pairs, and I'm testing many trades. And this system here in particular, I've tested on the 4 hour over a 5-year period. And it took me quite a few months to do this testing. So before I'm even going into the live markets, I'm testing the system very detailedly for several months. And then when I'm done with the back testing, it's time to forward test it, which is basically just this way of saying you're trading demo. So you're trading demo and you're forward testing that, and you have to do that for at least a couple of weeks. I would say you should demo trade, in my opinion, for at least like 2 months. And it depends on if you're scalping or if you're swing trading. But if you need to have at least like 50 trades forward testing. The more, the better, because the bigger the sample size, the more realistic the number will be. And it's not until then, after the forward testing, that you can start live trading. And it's at that point when it becomes very important with risk management and consistency. So when we're talking about risk management and consistency, I know a lot of people out there, and I know this from being active on Twitter and engaging a lot with the community, but also, listening to podcasts and watching these YouTube videos. And a lot of people are suggesting that you should have different risk approaches to different types of setups. Now, you have to understand that that advice is something you can start doing when you're profitable. Like when you have a working system, when you have a good idea of risk management and consistency, that's when you can start looking at individual systems or individual setups where you have, because remember, for each of these setups where you want to use different risk, you have to do the same testing period because you need to know exactly what is the win rate and the average R of this particular setup. If you don't know that, you just have to stay like, first of all, if you don't know that, you can't trade with it live because you don't know if it's profitable. But without that statistics, you can absolutely not use different risk parameters because you need to know what is the risk, how big is the risk of you having 10 losses in a row. If you're on a 40% win rate system, well, the risk of having 10 losses in a row is actually quite high. So at that point, if you're risking, if you're risking 2%, 2% per trade, well, if you're with the fivers, you're going to lose that account very quickly. If you risk 1% per trade, um, and you're all of a sudden you have a 10% at 10 trade drawdown, well, of course you're going to lose that account as well. So I would argue that it's much better to start with very small risk per trade in the beginning, and I wouldn't go higher than quarter of a percent, 0.25%, and then perhaps work your way up because a 10 trade losing streak on 2.5%, or on 0.25, I mean, that's 2.5. That's nothing. Well, that's not a beautiful drawdown, but 2.5% drawdown on 10 trades losing streak in a row, which you will encounter quite a lot in the beginning, that's good. Okay. If you're risking 1%, you can say goodbye to all the challenges and all the accounts and maybe even your personal account. So remember to always focus on capital preservation. I'm sorry about the sound in the background there. So yeah, always focus on capital preservation. Now, what do I mean here? Well, most people that come into trading, they come into trading because they want to make money. All right. So they start trading and they look at the chart and they're going to go, wow, look at this trade setup. It's amazing. I'm going to become a millionaire. Look at the money I'm going to be able to make on this trade. That's not how a professional trader thinks. That's not how we think. What we do is we look at a chart and we look at a trade and we say, how much am I willing to risk on this trade? And how much can I lose on this trade? We don't look at the profits because we know that if we follow the process of good trading while focusing on capital preservation, our equity curve will keep on rising without us having to focus on the profits. And that's the beauty of trading, right? Before I continue, let me just go through some of the questions here. We have one. Right, so I have one question here. We have from PHS, where can I get the Excel file you are showing? I'm going to talk with Saul and I'm going to see if I can perhaps prepare something for you where I might be able to share that. But if you want to see my process and you want to get access to that spreadsheet, probably I'll probably be sharing it in a live session next week. So make sure you check it out. Make sure you check out the live sessions because this is just a spreadsheet that I'm using for me personally. Um, and I want to make sure everyone knows how it's actually working before sharing it. So from Colin Jeffrey, uh, are these courses available? Um, yes. The courses. Well, I want to tell you guys, like, we have huge plans for the 5ers. I can't tell you too much, but we have some huge plans when it comes to education. So definitely you're gonna get a lot of courses like that. And Colin, we have Jonatan, is that you who gets on the Discord? Again, I'm still finding my feet. I need to get on Discord more. But yeah, I'm in the Discord on a daily basis. I'm always in there. I share my trades and analysis. We had an amazing trade on Euro USD today. And next week I will also be joining the Coffee with Traders in the Discord server. Um, so let's see where. So I'm not used to Zoom, so let me just go through all the questions here, and we'll move on. From Aswin, can you email the spreadsheet to the participant? I will look into that. I cannot promise anything, but I will look into that. How did you move your account from MetaTrader to TradingView? All right, so yeah, that's a good topic for another webinar. It's very easy. I can easily, move. Using a copy trader, you can trade from TradingView directly, and then copy all of that into your MetaTrader account. But that could be a topic for another webinar if you want me to show you that. Yeah. So Thomas says something. Thomas says something very important here. Risk should be a percentage of the amount you can lose, not the uh, full capital amount. Well, I guess yes or no, but I mean, sure, we might have different ways for looking at risk management, but what I'm trying to say here is consistency is everything when it comes to risk management, at least in the beginning. It's not until at a very late stage where you have been profitable for quite some time when you can actually understand which of these setups have a bigger, probability of working out. And if one of your setups does have a bigger probability of working out, well, yes, maybe you could add more risk on that one. But if you're just, looking at this chart and you're by your discretion adding, saying like, oh, this trade looks good, I'm going to risk 3%. This one doesn't look very good, doesn't risk 0.5%. Well, guess what? The risk that the trade that you're risking 0.5% on, that's probably going to be your winner. And if it keeps on going like that, you have a very, very, inconsistent way of trading, which is not very good. Right, so we have another question here from Patrick. For a prop firm account, shouldn't we determine risk as a percentage of the max drawdown we are allowed instead of the total trading capital? For example, the smallest 5K hypergrowth account has only 300 max drawdowns. The risk should be based on 300 instead of the 5K. Well, yeah, I would say, of course, you always have to have the max loss in mind, but you can still calc. I mean, the reason why I'm saying you want to focus on a certain percentage of your max capital is because whenever you have these position size calculators in TradingView or MetaTrader or whatever, they're not going to calculate your position or calculate your risk based on the amount that you're able to lose before hitting that stop loss. So it doesn't really matter if you calculate your risk based on the your full capital or the amount that you can lose. You should calculate it on your full capital, but making sure that it's small enough so that you won't lose too much in a row and hit that stop loss. So it's pretty much the same thing. It's just we're just saying it in different ways, I believe. Let me go through the questions here. All right, so Don says, if my strategy is over a 90% win rate, how much can I risk? So I would say there's calculations out there. Now I can't remember all of them, but there are some calculations and some simulations you can do that will help you with figuring out this. So there's like the Monte Carlo simulation, for example, and then there's others. And of course, if you have a win rate of over 90%, you have a very small chance of having many losses in a row. And remember, you're only gonna lose 10% of the time. So first of all, having a win rate over 90% is very uncommon. Very uncommon. I would say long term it's almost impossible. And if you do have that type of win rate, you're gonna have very small risk to reward. So like I've never seen anyone with that high win rate trade with it for a long period of time, and I've never seen anyone with that win rate have trades with an average R of above 1. It's usually like half an R or even lower, just a very small, quick in and out. And in that case, yes, you might be able to risk more. But we're talking here about new traders building a process to level up and become funded quicker, which you're not going to have a 90% win rate in the beginning. It's no way. Yes, and Frederick here in the chat has a very good comment here as well. That consistency is everything. You just go through those consecutive laws while lowering your position. Yeah, so that's also one thing I wanted to talk about here today. When you do have instead, I wouldn't have any rules for increasing risk on the way up. I would say pick one that fits your win rate and your average R. So maybe in my case, I would go with a quarter of a percent per trade. So 0.25% per trade is good for me. I only really need to make a couple of percent each month to be good. So 0.25% for me is um, a good size for my risk per trade. Now, if I would, for example, take the decision to um, take 1% per trade, so my max loss. So let's say I'm at break even. I've just taken my profits. I've got my payout. I'm at break even, and I have 6% to my stop loss. Now that's with 1% per risk. That's 6 losses in a row. Very possible with my system. I have around between 50 and 6% win rate. So right now around 50, I would say. And so 6 losses in a row, very possible. Now, what I do have is I have rules to limit my risk to the downside, but not to the upside. I will not increase my risk, but I can decrease my risk. So if I have 2 losses in a row, and let's say I have 1% risk per trade, I have 2 losses in a row. I immediately at that point cut my risk to 0.25% per trade. So uh, I can now lose like 20 trades in a row. There's a big difference between losing 20 trades in a row and 6 trades in a row. So you see the difference. You think that there's 1% per trade, and then you're hearing like 0.25%. It's like that's nothing, you cannot be profitable on that. But it's not about being making a lot of money. It's about preserving capital, making sure that you keep the money that you have. because without money, without capital, you can't make that big money anyway. So it doesn't matter. So focus on that risk. Um, all right, so we got Mr. Cibola is asking, what took you from an unprofitable, inconsistent, undisciplined trader to a profitable, consistent trader? Yeah, that's absolutely right. I was very undisciplined in the beginning. So I think it's would be a good idea to now with everything we've talked about, let's do a recap of everything we talked about here, and then let me give you guys a simple strategy that you can take from this. And then what I want you guys to do is, if you don't have a spreadsheet, just take a pen and paper. It doesn't have to be complicated, okay? Just take a pen and paper, have a column that says win and another column that says lose. That's all you need to have, right? Just get that pen and paper, and then for every win, guess what? You'll make one check or line or a one or whatever, and for every loss. And then you calculate how many loss, how many spreadsheet. I do have a spreadsheet, and I'm just not sure how I'm going to share it with you guys most efficiently, but I'll make sure that you'll get something. Okay, you're signed up to this webinar. I should have access to your emails and everything that like that. I will make sure that I'll have something for you that you can work with and try this out. How can I go back in this? How can I go back? Can I go back? No, I have to go from the beginning. Okay, let's do a quick recap here, and then I'll share some stuff that I want you guys to try. Okay, so what did we talk about? We talked about simplicity, testing and validation, and risk management and consistency. Let's first talk about an actual idea. Okay, so now you have to come up with some ideas on your own first. Okay, can you see TradingView here? Let me know if you can see TradingView. Wow, look at that. We took this trade in the TradingView earlier today, managed to hit that TP beautifully. Yes, we do have a Discord community. If you are a The5ers trader, you can join it. You can find the link in the hub. So let me guys give you. I want to give you some homework here. Okay, I want you guys to. I've recorded a video on this, and it's going to be uploaded on our YouTube, most likely tomorrow. Most likely tomorrow. So maybe you can watch that and as an introduction. But I want you guys to focus on market structure, and specifically break-in market structure. Okay, so don't use any indicators. And now I'm not telling you that this will be profitable, and that's not the case of this uh, practice here. The idea for this homework, this practice, is to give you something to test, and it's not about creating a profitable system for you. It's about giving you something to work with, and it's your job to make this profitable. I'm just giving you a very, very simple way of utilizing price action. It doesn't matter what time frame you are on, but I do recommend that you look at different time frames to make sure that you're not, going long on the lower time frames in right at a high time frame resistance area. But this is it, right? You want to find a downtrend. This is a downtrend. Let's see, we got some questions here. Yes, Colin, there are trading videos on YouTube, and so I've just started here at The5ers as the educational or the trading content lead, and it's my job to give you guys educational content, and it's my job to help you become profitable traders. So yeah, you're gonna get a lot of more educational material. Um, So the link for the Discord server, I'm embarrassed to say that I'm not sure exactly where it is, but it should be able to, you should be able to find it in the hub. Okay, so here is a downtrend. Now, of course, it's just the same thing with an uptrend, just flip the chart, right? So at the, excuse me. So at the bottom of a downtrend, you usually have like a change in behavior. And I'm talking about this in the video that we're uploading tomorrow as well. We have a change in behavior. Okay, this is a change in behavior. Why is it a change in behavior? I'm pretty sure most of you can understand that this is a equal lows. We have a double bottom, equal lows. It's no longer lower lows, it's equal lows. What do we have now? We have equal lows and equal highs. This is most definitely change in behavior because we're now trading it inside a range. It's no longer a trend. Okay. So we talked about focusing on the break and retest. That's the horizontal level. Remember, again, market structure, horizontal levels. That's everything you need to become a profitable trader. Am I using only this? No, I have indicators on my chart to increase the profitability, increase the probability of my trades. But at the very core, this is what I use. And guess what? This is probably what everyone else is using as well. So keep it simple. Keep it simple. You don't have to reinvent the wheel. We already had people do this way before us, and they've been profitable. So let's just copy what they're doing. So we are now seeing a range. We're breaking above the range highs, and we're now coming down to test the breakout level. That's where we want to enter. Now, what I want you guys to focus on is I want you guys to find this pattern in the market, okay? And I want you guys to wait for the breakout. And then when price retests this level, I want you guys to look for a bullish engulfing candle. And I'm going to show you what this looks like. I want you guys to see a bullish engulfing candle. And I want you guys to enter on the close of that bullish engulfing candle. And then I want you to put your stop loss below the level that got retested, and your TP is going to be at the highs, like this. Now, I want you guys to make sure that the risk to reward of the trade is 1R or higher. Should be 1R or higher up to the last local high, the high of that breakout move. A very, very simple idea. And this is something that I want you guys to test, and you will be able to test it with a spreadsheet like this. And it's very, very simple. You put in a 1 for a win, a 0 for a loss, a 1 for a win, and a 0 for a loss. And you will then get the overall statistics. And you can then, like I've done here, just copy this for different pairs, for different strategies, or whatever. And you will see, am I profitable or not? And yes, there are specific guidelines to define the boundary of horizontal region. I don't think I have time to kind of go into the very basics of that here, but the idea here is just to give you a rough idea that I want you guys to test. And again, I want you to keep it simple. Keep it very simple. And it's okay if this is not profitable for you. It's okay if you have a win rate of like 20 and not profitable. It's not the idea that we want to create a profitable system from the get-go. We want to see what works. And if this doesn't work, then we can start talking about how can we improve this? You take something very simple, and you're not supposed to improve this until you've tested it and you confirm that it's not working. If it's working, just continue. The time frame does not really matter, but like I said before, it's important that you have some idea of the higher time frames to make sure that you're not taking a long trade on the 15 minute right inside a high time frame resistance. So this is the general idea that I want you guys to test. And the backtesting spreadsheet here, there's no risk management here. Okay, so that's when you have a profitable system, that's when you have to forward test it and apply risk management. But for risk management in the testing phase, in the forward testing, to make everything as simple as possible, just use 1%. 1% might be too much. But for the forward testing phase, when you're on demo trading, just use 1%. We want clear round numbers to make sure that it's easy to understand these statistics. Now we have Euro USD here. Let me show you exactly what I showed you with the idea that I showed you here. So this is actually a trade that I took this morning. It was actually a trade that we talked about, or Anna in Coffee with Traders talked about this one in the morning session in our Discord server. And then I just looked at the level and said like, oh, this is a decent level for a bounce. So I looked for that pattern. So this is on the 5-minute. And what you have here is a downtrend. Okay, so we want to look for this. Downtrend comes down, forms a double bottom or whatever, forms some type of range, breaking retest of range highs and continuation. That's what we want to find. So let's see if we can play forward here and see if we can actually find something that looks similar. And here we have a move to the downside. That's a new lower low. And that's the change in behavior, okay? Remember, we get a high, lower high, we get a low, settles a lower low, and here we have a equal low. And then if you ignore the wicks, you'll actually have a higher low, okay? Yes, yes, Colin, this trade you could definitely have entered this one on if you were in the Discord server. But I think if you want to be trading alongside me, it's better to join the live trading room on Monday, Tuesday, Wednesday, where I take trades like this live. So what we have now is a higher high right there, and now we have that break in structure. Okay, so we have that double bottom, W structure. What I did on that breakout was I went into the 1 minute. And I saw here that, wait a minute, we have a really good looking W structure here and the break and retest off that level. And I believe I entered on, I think it was maybe this candle or somewhere here. So I wanted to enter here. And my stops, I believe, was all the way down here below that low. So remember, this is exactly the same stuff we talked about just before, exactly the same structure. A downtrend could be an uptrend as well if you want to short, but a downtrend comes into a range and then a break and retest. This is the fundamental truth of technical analysis. This is at the very core of technical analysis. You will see people take this and they will put it in a package, wrap it with some nice paper, call it something, and then sell it to you. But this is what it is. Market structure, break-in structure, horizontal levels. That's all you have to focus on. So now we know that we have the level, we have the entry, we have the stop loss, we have the invalidation level. Now let's find the profit target because we want to make sure that we have a profitable trade. So if you were testing this, I said you want to have at least 1 hour. So that would be this. Don is asking, can we use trend line breaks as extra confidence? Well, why? What I'm saying is, why would you want to add something extra if this works? If this works and you're profitable doing this, don't add anything extra. But I will think that when you're testing this out, you might not be profitable. And when you do, at that point, you might start thinking about adding new things. And at that point, it's okay to add new things and then test it again to see if that's working. Because what's working for me, and this has worked very well for me over the last 7 years, what has worked for me might not be working well for you. So you might have to adopt, well, you have to adapt this type of trading to your personality and your trading style. But we have to start at the same place. We have to start at the core, at the foundation of technical analysis. Now I'm going out to the 4 hour. Do you guys notice anything here? I'm gonna give you a second here. Are you noticing anything here on the 4 hour? Well, I can zoom out even more and say, are you noticing anything here? Are we not seeing the exact same pattern? Are we not seeing the exact same pattern, or at least very, very close on the 4 hour? We were just on the 5 minute and we saw this, and now we're on the 4 hour and we saw this. Why is this happening on all time frames? Why is it working on the 1 hour, the 1 minute, and the monthly and the weekly? Well, that's because this is the fundamental truth of technical analysis. This is market structure and horizontal levels. This is how markets move. And this is what technical analysis is at the very core. Here you have a downtrend, a change in behavior, somewhat of a range, a break of structure, boom. Again, here on the 4 hour, a range, a break of range highs, break and retest of previous range highs, a break of structure, no longer in the range. We have a potential trend forming. And that's also the level where we entered on the 5 minute. Okay, so if you go back to the 1 minute, we looked at the 4 hour, right? So let's just go back to the 4 hour to talk about profit targets. So we need to mark out like horizontal levels here. Very simple. You just look at levels where price has been rejected. That's going to be that one. I use candle closes for this and not wicks. So ignore the wicks. Just add levels where you think price. Add levels where price has gone into resistance in the past because it's most likely going to go into resistance once again. So now we have clear profit targets. Where's the trade at? Right here. So now we have a stop loss level and we have profit targets. So we want that target to be here, right? And something very interesting happened here on your USD. This is a different trade, right? Is it not? So some in the chat, this is different. Yeah, I'm looking at the chart and I'm like, am I going insane? Because yeah, that's I looked at that one. Okay. Sorry about that, guys. I'm a bit confused. It's a headache. Like, huh, could it have changed that much? So yeah, something very interesting happened here. We had the break and retest here. You see, on the 1 minute here, we actually had that horizontal level right here, and we had that beautiful W, and then a break and retest, and that's when you had that bounce right here. That's when I decided to enter, and that is the TP. And then I believe I here had even tighter stop loss. And if you want to be really risky here, you can have like a very, very tight stop loss. Now I don't recommend that, of course, because it's quite tight already, but maybe somewhere here to like base it on these right here. But just for the sake of this practice that I'm talking about, just put your stop loss below the last low, and then you'll see price moving up quite nicely here. Oh, stop. What's happening? Right. Hit that target right before the inflation numbers coming out. So here you have it, a very simple way of approaching the market. So number one, you have simplicity and then testing. So now you have this idea. Now it's up to you guys to test it, and I will make sure you get access to a backtesting spreadsheet. And when you have that spreadsheet, just try this out, look at the win rate and the cumulative R to see if your system is profitable. Question from Don here. RR is 1 means we have to get extra confidence. No, not at all. Not at all. The RR stands for risk to reward, and it's basically just the number right here. So you see that the number here where it says 1.28, if I move that down to 1, it basically just means that it's you'll make the same amount as you'll lose on this trade. You'll make 1-to-1 risk to reward. You'll make 1R, you'll make 1% if you win, you'll make 1% if you lose, if you risk 1%. Up here at our target, we will be making 2.35% if we risk 1%, which means 2.35 R. So R equals risk in this case. Um, all right, guys. So now you have this idea, and then I want you guys to test it with a spreadsheet like mine, and I will make sure to get you one. And then it's up to you to be consistent, right? And when you get you get good results. And also, guys, I am. Yeah, there's sessions, lots of different session indicator you can like. Uh, Patrick here asked, when you do backtesting, do you factor in the time frame when you were sleeping? No, because I'm sleeping, right? So if I'm not going to be trading, like, if I'm creating let's say I'm creating a video for YouTube where I'm creating a system that I want you guys to try, then of course I will have to backtest that to make sure that it's working in all time frames, because it's not gonna say like, oh, this guy from India, try this system, or from America, try this system, and then I'm only testing it when I'm not sleeping. So when you guys are awake and trading the system, I have no idea if it's profitable or not. So that's not going to work. But when I'm my own system, my own trading, of course I'm not going to backtest the time session when I'm sleeping, because I'm not going to be trading. So that makes no sense. And price action does move differently on for example, Euro USD, based on the London session and the Asian session and that sort of stuff. The time frame I suggest to use on for this concept, it works on all time frames, but you will find that it works better on some pairs on some time frames and better on other time frames. But I would say that you shouldn't go lower than the 15-minute. Because you should always, like, I do recommend that when you start out, you should focus on the higher time frames, at least like the daily, the 4 hour and the 1 hour, and not really go lower. But if you could also like go down to the 15-minute, because this pattern will exist obviously in on all time frames. But it's up to you. It's really up to you what you think works best for you. All right, guys. So we've done an hour now, and I think I've covered the most basic thing here. Of course, there's a lot more to talk about here. I can talk for hours about this. There's a lot more to cover, really, when it comes to like how to become a profitable trader. But the three core principles, in my opinion, is simplicity, testing, and consistency. And within consistency, you have risk management, because without consistency, risk management becomes gambling. All right, guys, I see that there's a lot of questions here, but unfortunately, I will have to cover all of this in our next live trading session. So I would really recommend that you guys join me next Monday at 9 a.m. Eastern. I think that's Eastern, right? At EST, and then 2 p.m. UTC. I can cover this for you again, and I can also cover some extra stuff that you might find helpful. All right, guys, thanks for joining, everyone. Now let me try to find the button where I close the webinar. This is going to be a good, fun one. See how long this is going to stay open. All right, I found it, and thank you all for joining, and I hope to see you all in the next one.